The following is a presentation of TFNN. The Global Market Pulse with your host, John Logan. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, John Logan.
Excuse me. Hey, guys. How are you? It's Wednesday morning here in the States, and I'll be heading back to Asia next weekend. So not this weekend, but next weekend. Heading up to New York on the 29th to speak at Bloomberg on the Thursday late afternoon time up there. And you guys are welcome. If you want to go up there and check it out, Bloomberg's got a great facility. They're saying that anybody can go up there, not only institutional investors and Bloomberg subscribers, but anybody who's it's a sales situation for them. They're looking at it as an opportunity, but they're going to have me and about two other speakers up there on late Thursday afternoon. And if you'd like, send me an email. I'll send you kind of a flyer brochure that they made for that. And if you're in the New York area or want to just travel up there and hang out, love to say hello, and might get something pretty neat out of it. There's usually a couple of good guys up there talking about some new products, and if you like happy hour, they've got a good happy hour afterwards. So just notifying you of that, and let's get right into it. I'm looking at Delta Airlines. We're going to talk about the S&Ps and a couple of things late, just a little bit, but Delta Airlines, we always talk about, and this was obviously, we're going to look at some earnings situations here, but Delta Airlines yesterday afternoon obviously came out with some news. Was it afternoon or yesterday morning? Let's see here. Before the market yesterday. Okay, so before the market yesterday. So we got a little bit of a notification before the earnings announcement that we're probably going to have a new profile. During the day, we had that new profile. And I'm not a big fan of doing anything before earnings announcements on stocks, or really, before unemployment reports on the notes or things of that nature. But right now, if you've done that, you sat on the sidelines. I mean, if you had the kahunas or whatever enough to get long before the announcement yesterday morning, that's great. It's not something I usually do, but now you've got a new profile appearing, and now you've got price action above the new profile. So this was something that we migrated above this profile yesterday, closed above this new profile. That's a very strong situation here. 48.10 now is going to be support on Delta. 49.17, we're kind of up here in the stratosphere now. We've had a 10% move in Delta, approximately 10% move in Delta in a 24-hour period. But right now, do you buy this thing as it's on its highs? And this is just a little bit of a primer on, using profiles, some other things that we look at, and earnings announcements at the same time. So right now, this is kind of the collection area here down around the 48.10 area. More than likely, you've obviously got a stock that's had some good relative strength relative to the market. And now we've got to kind of wait patiently on Delta. And 48.10 is going to be that area that you could more than likely take a look at some longs with stops down below. Okay. We're going to take a look at Netflix, a very similar situation. Well, similar that it's crossed above profiles here. But we talked yesterday, sitting on the sidelines about Netflix in general, because, you've got something that is kind of in the gift that keeps on giving from the short side. And there's a lot of bears in this stock. So this was, let me see, what was this? I'm pretty sure this was after the close. Let me just confirm that. Yeah, after the market closed yesterday. Okay. So pre-market, we were looking at it, and we were kind of, I think we were down in here, and then we were kind of in the middle of a fair auction above 334. We obviously had some news come out yesterday afternoon. We powered up. We're above unfair highs here on the close. and now we're well above. Okay, so 410.70 right now. So yesterday afternoon, or during the day, we traveled and traversed and closed above a profile above 340. What is it? 345.63, and now we're trading up in here on Netflix, and that was a really, and the reason I'm bringing this up, it was a really, really good reason. Here's the pre-market on that, or the aftermarket and the pre-market. That's a really, really good reason not to try to play around with these earnings announcements. And, the trend's down. We got inflection points to pay attention to. You had to close above. That was pretty damning for the shorts. But, who knew that this thing was, 410 on a percentage basis is about a 25% move, I believe. So that would be relatively painful to be wrong there. Okay, I'm going back to Delta. Sorry about that. Okay, Johnson & Johnson, we're going to take a quick look at this one again. Okay, so market didn't like the reports. We're down here on Johnson & Johnson now. And the leverage point, 103.57 on the daily. These are just kind of some of the bellwether names. And 102.23 is going to be short-term inflection point on the short side. So here's the long-term. This is going to continue to be support 157. If we get closes below 157 on Johnson & Johnson, as you can see there, pulling up Johnson & Johnson, that's going to be very, very damning for the longs. But that being said, we had prices move down 157 unfair lows. Prices moved down to a low of 126. So we touched that unfair low. We're trading 101.10 right now. And you've got to pay attention to this. Obviously, the stock's been in an uptrend. We've come back to ultimate support here. We broke down on the dailies. You could take some shots here on Johnson & Johnson, but the cool thing is I like about this type of trade, but you got to pay attention to weekly closes below this thing. The cool thing is about this type of trade is you can put relatively tight stops around something like this, and you got some targets above that will really make the risk reward scenario a very ripe situation. So not great news. Market's kind of volatile in general, the broad market. We've made lower lows recently back in October, and that news actually, you could have looked at it as that news should have plowed this thing actually well below here. So as we look at this, putting some stops in below and taking a shot, I hate to use that terminology, 157 stops below might not be a bad idea on Johnson & Johnson. Just kind of today looking at some earnings related type activity. If you guys are out there trading stocks, I'm a kind of a commodities guy at heart here, but there's been some really, really good moves, and some of the things that I was picking out on the scanner as I look at these things have just not been shooting fish in a barrel, but have been given some really, really good trading opportunities, in my opinion. So, and waiting for the kind of the news to come out. Now you've got computers or CA, I believe they're still called Computer Associates here, 3144. And we've had the news come out, and now we're kind of hovering above here. So the good news is on CA, stops below 3144 on this product. Market digested the news relatively well, and that's what we're looking at on computers or CA, 3144 weekly unfair highs. And the reason I picked this up is 3144 weekly unfair highs, and that's coupled with 3144 daily unfair highs. I forgot to mention that reason why I'd actually used the stock as an example. You've got a dual time frame inflection point. You've got a dual time frame inflection point on the weekly and daily, and that's relatively strong. So that's another cool thing about using stops oriented around this. Computer Associates. I'm gonna, if it's okay with you guys, I'm gonna got a little request to look at beans and wheat. We're gonna take a look at that and after the first break, if that's cool. We looked at BHI yesterday, and we got to take a look at Big Blue here, IBM. I don't think any news could be good for this stock. I mean, I think they would always take it as, sell the rally, sell the rally. We actually did get back above 155.90, but again, I'm not, if they'd had some good news and we got back to 163.09, that'd been great. That'd been just a gift to sell it up there. But right now, it's still a sale below 155.90 with stops oriented above on IBM, in my opinion. Had a little bit of if that's a real tick, that was a gift. 163 hit in a kind of a day trading fashion, and there's that 163.09. So what do you know? If that's real, I don't know. Maybe it's real. I wasn't trading this yesterday afternoon, but my God, what is the high print there? 163 even, and that inflection point we talked about is 163.09. So that's pretty amazing. Who knows? I don't know if that tick's real though. So we'll find. I'll find out on the break actually. All right, so let's take a look at some things that are in play today. And I'm sorry, I wrote down some things here. I'm trying to find my notes. eBay. Damn it. Hold on. eBay, baby. eBay. Here we go. Okay. So they come out with information right after the close today. And let's just kind of take a look at what's going on here. So you got support on the weekly at around 53.73. We're kind of yesterday's close. Let's just give pre-market 53.80. We're trading right now. We're below profiles here on the daily. Looking back in time, it's kind of been in a range for seemingly ever between 60 and 45. All right. So what do we do with this? We're going to wait and see. And if we can get some news digested, it's usually not a too jerky news intra-bar after IBM kind of, I don't know if that's a bad tick or not, but if this thing starts heading a certain way and we get kind of a daily close above that weekly unfair low, next targets above are going to be 55.05 and even higher for eBay. But if the news is not digested well, we've already had one close, remember, below that 53.73 area, and that would just mean more confirmation, trading below profiles, okay to be short, not okay to be long on eBay in general. Guys, we'll be right back and cover some of the usual suspects in commodities world and then get back into some of these earnings announcement type related stocks.
How would you feel if you had a powerful decision-making tool that has the ability to find high-probability trading opportunities across multiple time frames in equities, currencies, and futures? Search no more. Take advantage of the best trade with the TAS Profile Scanner. Trade with confidence and clarity while using the software that thousands of institutional traders rely on to help them make the best and most accurate decisions. Scan over 1,000 equities, currencies, and futures instruments for high-probability trading setups utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time, for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. Subscribers will also gain access to the December 9th workshop with John Logan. There's no obligation to pay anything. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com. Check out the new look of Tiger TV. Now you can see all hosts, charts, and computer screens live in high definition. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Thinkorswim, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV. Now, crystal clear in high definition, 24 hours a day, 7 days a week. If you haven't seen the new look of Tiger TV, then visit TFNN.com. platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. John takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi guys, welcome back to the show. We're primarily looking at earnings related stocks today. And let me turn this down. So somebody asked me to take a look at the grain market. I've been following this relatively close lately. I'm trading 985 pre-market here, 985 and a half. Here's the weekly situation. And I gotta, God, I hate to even talk about this because it's against my religion basically. We got a kind of a good tip from the elevator crew last week or the week before actually. We're looking at March beans right now, and we got a good tip, and we talked about this report coming out, and kind of talked about the pluses and the minuses and what the percentage chances is this thing was going to continue to go up, being beans and staying above these weekly profiles. And we pretty much narrowed it down to about an 80% chance beans were going to go down because the report there was a lot of things baked in to that report, and there was a lot of reasons that people were looking to sell some of these March beans contracts, and that ended up working okay. I normally don't like to factor in too many hunches like that, but it was kind of a mathematical play in our minds that we were like, okay, if we can block out everything and maybe deduce that we've got an 80% probability that we could be right on this. So we sold some contracts. That was around 1050, and we talked about the targets down below on this March contract for that trade ultimately being 980 to 983, and we've hit that. And yesterday we went to the 970s. So when we hit it last week to the tick and we kind of rallied back up into the 990 area, we had kind of taken off the weight on this trade. But right now, this particular contract, I'm pulling up the daily now, we kind of ignored the $9.97, $10 area. We thought we'd get a blow through of that anyway. But right now, we are looking at March beans. The word is, from a fundamental standpoint, that these things actually could go a lot lower, believe it or not. And we were, $8 beans is not out of the question here. And you've got a pretty serious ethanol on corn. We're going to get to this in a second, but you've got some shifts going on fundamentally. You've got a serious piece of legislation that is getting submitted and will get voted on about taking the ethanol mandate out of the corn market situation, and that's by some pretty serious senators, and that basically has kept a bid in the corn market artificially forever. I don't have to tell you that, but that's, some bean players are going to have to kind of digest that too. Therefore, we're still looking at the retracement ultimately being back up into the $9.97 area, $10 beans, whatever, and then actually this thing heading south again. So the technical damage has been done on the interim, on the intermediate. Correction, no ethanol legislation, none. Actually, I read some information. Somebody's telling me there's. Actually, I'll send you the link on this. But anyway, 9.97 is going to be the resistance point on the bean trade. If we can get a retracement back up there, I know we've kind of retraced back up into the 9.83 area. And then we're going to take a look at this thing actually selling off even farther, and a weekly close below 9.83 is going to be pretty damning for the longs on beans. So we're looking at this to head farther south, and 9.36 will be the target on it. Actually, I'll send you some stuff that I've been reading on this, John. Maybe there's an update to it. Anyway, let's take a look at. Let's take a look at wheat. Wheat, obviously, we closed below inflection points on March wheat last week, 536.3. That was kind of the target on wheat down there. Now we're kind of getting back above here again, 544 pre-market. And we've got a new daily box that might appear today. So we've got this orange indication here on our daily. So we're going to get new profiles here on wheat. But I think we can kind of say that we've met some downside targets right now on wheat. We're going to have to sit tight on this right now. Okay, so wheat's kind of met some targets down below, and we're just going to have to sit tight and wait and see what develops on the daily to get some new inflection points on March wheat. Thanks, guys. We'll be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi guys, welcome back to the show. I'm looking at Cree. We took a look at beans and wheat a while ago. We got to go back to corn, but as I was looking at some earnings announcements yesterday and today, Cree got a lid here, seemingly right after that announcement. You know, obviously moved up. That's great for longs. Couldn't get through or close above the 32.84 area. So that's kind of what we're going to have to see on Cree. As you can look at this, this thing's just kind of been ugly to say. Man, I don't know if you guys used to do any, you know, I came up in the SOS days back in the mid 90s. This was a heck of a stock to trade. I'm just never forget those days. Anyway, 32.84, we got to have a close above there, and then I think there's going to possibly be some blue skies for Cree here. But you know, this again, earnings really hadn't done a lot for this stock, and this stock's been decimated over time. But this would be, you know, looking for kind of value situations. If you look at this in general, on a relative scale, you know, a lot of these fund managers will look, you know, things on sale, things like that. They'll look at a lot of different things, fundamentally speaking, but the technical, you know, positives or whatever are going to happen here for me to take a look at this. About nibbling 32.84 closes above are going to happen on Cree. Let's take a look at something else. Morgan Stanley. Know a lot of guys at this firm, a lot of girls at this firm in Asia that are sales brokers there, if you will. They do quite a bit of business. You know what's amazing is, you know, people in mainland China just dump money into Hong Kong, and these people are sitting in Hong Kong. I'm not bad mouthing them. They're probably listening to this show actually just for comedic purposes, if nothing else. to listen to me ramble about some of the things that I say about Morgan Stanley here, but they, they're sitting there not really knowing how to trade. I'll say that. People in mainland China are constantly trying to get money out of China. So they're kind of waiting there with open arms, and these people just come in to these firms with, I'm not joking, $50-100 million, and they just assign them somebody that's basically a salesperson that doesn't know a lot about trading, and that just floored me when I started really understanding what that was all about. So somebody at Morgan Stanley sitting there, they get an account for $50 million to not manage, but to basically place into certain areas. And when they attempt to trade, I mean, this one girl in particular has lost I know for a fact she's lost $200 million of client money out of mainland China trying to trade. And that blew me away. And it is astonishing. And that's the same type of town that they come in from mainland China with literally duffel bags full of money. I watched this happen in Kowloon over there at some of those high-end stores, the Bulgaris of the world, places like that. They're literally waiting they're waiting outside in line to go in these stores, and they'll just fill up the suitcase full of whatever they have and go back home, no matter what the price is. And it's just amazing just to see what happens over there sometimes. Anyway, 35 on Morgan Stanley, 35.02 is the resistance point on this. We had some technical damage last week. We've been kind of hanging around below profiles here, getting back to technical analysis, thank God. 35.02 is going to be resistance here. We're trading 34.71 pre-market. Had a little bit of a noise after the announcement yesterday. We've obviously been in a downtrend here. And as you look at the weekly, which is the most important thing we want to look at, in my opinion, we've been down to 34. We've traced back up into 35.02. I'm a little bit bearish on the broad market in general, being the stock market. You've had some, this thing at least show its hand a little bit, having some technical damage here below weekly profiles. And now you've got a kind of retracement back up into that unfair low. And in my opinion, this is one of those cool things. And the scanner actually picked this out. Stops above, and the ability to kind of use this as a high probability setup for this to migrate lower. Now, you had the initial technical damage, obviously. Similar situation on Morgan Stanley, just to give a little bit of education here, and having a profile appear well above here was actually super bearish. Remember, when profiles appear above or below price action, and we're not even in the middle of the fair auction here, those are very bearish signs. So we got that indication on the intermediate, and now we kind of got the closes below on the weekly. And I know we're kind of in the hole down here, but we got those intermediate closes below. Go back and retest. That was the powerful setup there. And again, the scanner will kind of alert you to these things so you don't miss them. And now we're more than likely going to trend lower here. But the good news is you can orient stops around and above that 35.02. And if we get back above 35.02 and close above 35.02 on the weekly here, you more than likely will get some new profiles appear here on the daily, and then there'll be a situation where you may be able to change tone on Morgan Stanley. But right now, seemingly to me, all things considered, we've got a situation we might be able to take advantage of on the short side. Just want to alert you guys too that in the scanner, this is not organized exactly right. It will be organized later today, but we put the ETFs in here. So if not only can you drill down into quite a few, I think about 15 different exchange products here, you can now get into the ETF in general. So if I choose the XLF, obviously I'm going to see the banking sector or the financial sector, if you will, and I can go down and do filters specifically on, what's sitting around the daily unfair lows here and ace limited is. And if I want to look at daily unfair lows, okay, so let's just take a look at what's trading below the box. And then I can see inflection points that are lining up here. And Morgan Stanley, as you can see, this is really cool. What was, having some technical damage on the daily, and lo and behold, I've got that inflection point to look at, 3502, and it paints the whole picture for you there. And here's the kind of the landscape view, which is really neat. Basically gives you the level of the market and shows you that all the inflection points in one grid. And that's kind of neat. Now, as we've talked about, the reason I was kind of bearish on the marketplace, we got a little bit of a mixed bag here, and we talked yesterday. I actually did a research report Sunday night, talked about this in detail. Got a little bit of a mixed bag here on the daily and the weekly. We also talked about yesterday this on the S&Ps. I'll pull this up. We talked about the 2027 area again because of this mixed bag. There's that 20. This is the S&P 500 futures March contract. This 2027 area, coupled with our current POC, a very wide profile on a relative scale. So the POCs are going to come into play. We've got a new profile that has appeared on the S&P. So we caught a little bit of a decent resistance opportunity, trading opportunity on the intermediate term yesterday. We're trading 2011 right now, but now we've got a new profile, 1988.60 down below, and this profile is obviously a little bit less wide. And so now we have some targets down below a little bit farther, 1988. But remember, stops can be oriented above the 2027 area, and if that happens, we also got to take a look at our breadth again. And if these start all going positive weekly and daily, we get to close above 2027. I don't think it's okay to be short anymore. You'd have to kind of block that side of the fence out for a while. So that's the situation on the S&Ps. I left corn out a while ago. We got to go back to corn. Somebody was actually asking about this. Okay, so corn. And let me get that bad tick out of the way. 379 and a third sitting down here on March corn. $4 unfair high on the weekly. That's the long-term view. Stops below 379 on the longs for corn. And you got four sitting up top. So you got basically the $4 general neighborhood is super resistance on this thing, but you got some support down here at 379 on the daily and 379 on the weekly. So you've got two time frames lining up there on that product. And what do you do? Corn's, to be honest with you right now, it's kind of a no trade to me. We're kind of in no man's land on both of these areas. We caught a little bit of a decent opportunity touching almost this 379 area and then kind of getting back above. That was the trading opportunity for me on corn. But I'm going to go back into the scanner here for a second, pull up our futures, let this populate, get rid of my filter that I always forget to do daily. Boom, clear sorting. And I'm going to go into corn, March corn, and you can see these inflection points, 379, and there's 379 also on the daily. So you've got major support there, and you got 404 and 400 weekly and daily. So this is kind of cool. You're in a range-bound situation right now, and there's not a lot of leverage here, and we've even got a 240 profile attempting to appear. So just this is kind of a wait and see on corn today, in my opinion. Okay, got some more notes here, some things to be aware of on the stock side. I'm going to pull these up as fast as I can. USB, wanted to get this in because I've been relatively bearish on the financials. And I think they're coming out, let's see, before the market. I don't know if they've come out yet. If anybody can let me know if they come out. I don't think so. 41.35 pre-market. I don't think they've come out. Got a new profile attempting to appear here. Should appear today. So we're going to have to wait and see, and the scanner will give you that new profile once it appears. But right now it's kind of a wait and see on U.S. Bank Corp. There's 240s. Just a second, guys. Okay. Well, we got, let's see, 3 minutes before break here. We're going to go into some of the usual suspects that we normally cover. We've got to look at gold. 1301. Okay, so gold, we talked about that area, 1295 to 1304. Just a second. Got somebody from JP Morgan trying to hit me here. All right, so we talked about that area up here, 1295, 1303, 1304. That's been something, you know, that we talked about from the past that we're going to have to pay attention to. Obviously, there's no new profiles appearing here on gold. And the 240s, let's just get back into that. We talked about this yesterday. There was a new profile. I think this was appearing yesterday. Yeah. So right now, you know, what do you do with gold? I'm out of gold right now because I thought the 1295, 1303 area was a pretty powerful area to kind of sit tight with. Obviously, we've powered through that. Technical damage right now in the short term is going to have to be paid attention to below 1283. That could be looked at as kind of a trailing stop right now in gold. If you're still long, 1283 is going to be support and stops down below on that particular scene with the kind of the regulation of the trade. As you can look at, the 240s have kind of regulated this trade up from the 1200 breakout that we've talked about, if that makes sense, guys. So right now, what do you do? I think it's kind of a sit still with gold right now. I was actually out yesterday because we had that power move up and getting into that little DMZ up top. But if you're still long, you got to stop out below 1283. And to be honest with you, if you are going to play the game of being out and trying to buy gold again, 1283 might not be a bad opportunity to try to pick up on a short-term, very light situation on gold. And if you can sit tight even farther, I mean, we've made about 100 points here on this product from the 1200 breakout. But if we can, excuse me, guys. Hey. Looking at here is a new profile possibly appearing here on the daily, and then being able to key off of that if you can wait patiently on that on gold. Okay, we're going to look at the notes really, really quick here. And why? Because we've got a new profile appearing, and I follow these things relatively close. This is a pretty wide profile here, and notes right now, in my opinion, we're going to have to sit tight and just wait a little bit. Here's the situation on notes. On the 240s, we kind of have a new profile that appeared above. Remember, that's relatively bearish when that happened. So now we've got a leverage point here. 130.06. I'm not a fan of shorting treasuries, as you know, but right now in the short term, we've got some leverage here. We've got to get back above into this box on the 240s to really feel good about the longs again. We'll be right back, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped, and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Catch Steve Rhodes as he teaches techniques on technical analysis using pattern recognition, celestial charting, Fibonacci, and other tools. The Trader's Edge, next on TFNN.
Hi guys, welcome back to the show. I got Dun & Bradstreet up right now. Unfair lows 118.44. Got this on my radar screen for a short opportunity here with leverage points short around that 118.44 stops above. Just wanted to point that out. Something I was kind of taking a hard look at lately. Let's take a look at crude oil. Got about 3.5 minutes here. Not a lot of changes here, folks. Again, the leverage point 48.23 for shorts, kind of forming a little bit of a pseudo bottom here, and the reason. Did a free video the other day on the XLE, and the reason being is that the relative strength situation here, we talked about 74.18, trying to try this again. We got the little bit of a panic move down below there, but actually closed above. I love the way this is looking. This week already, we've come out down and retested 74.18. We're trading pre-market 75.63, so we're still looking at the XLE as a positive situation with stops down below 74.18 and 77.15. So, I guess if you're gonna, think about the bottom in crude oil, the XLE might be a better situation on the long side than just trying to trade the future from the long side, because we really, I can't bring myself right now to look at crude oil in general in the March contract yet and start nibbling. But the XLE is kind of giving you that okay sign on the long side, a little bit better than crude oil. Remember, crude oil could continue to tank, and the XLE might weather the storm on that situation a little bit better, and it's technically looking a lot riper at this stage. Okay, we're going to take a look at Amazon. All right. Here we go. I don't like this stock, fundamentally speaking, and we're sitting seemingly right on the precipice of a cliff here again. And you could look at this as a triple bottom, but I'm looking at this as lower highs and compressing down. And we may rattle around here a little bit higher. Pre-market, we're trading 290.10. But right now, I think breakdowns have to be sold below here. You know, just like we had previously back in October, this is our weekly chart. We had a close below. It was a decent opportunity to take stops around that 290.77 area, dims the brakes. That's okay. But again, we're looking to me over time that we're trying to compress down in this area, and we'll more than likely have a whoosh sound. And you got to keep your eye on this. And I think we've obviously this is the technical damage on the dailies on Amazon, so that's something else to pay attention to. Euro getting a move here right now as we speak. This is real time. We're more than likely going to have a new box appear, orange bar here. So again, this has been the gift that keeps on giving. We're not going to go in a straight line down. We talked about staying away from this after we broke down recently and just waiting for some new information to appear. That's the case. And we've got our first technical damage, believe it or not, on the euro since well above 122 happening right now as we speak on the 240s, and that unfair high on our 240s right now on the euro is 116.07. 116.07. We're trading above there now, and this may be a contra trade against the long-term trend down opportunity now to kind of go along the euro just for a little while on a short-term basis. But remember, we'll have new inflection points here appear and on the daily new profiles, and that'll be something to hopefully get some more trading opportunities from the short side, to be honest with you, because the long-term trend is down without question, and I don't want to argue with that too much. Guys, you've been great. Steve Rhodes is next, and we will pick it back up again tomorrow.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.